What is going on, everybody? I want to talk to you guys a little today about the market, and why I think Ethereum will end up at $1,000 really soon here, and the data that I have that I'm using to back this up, and what I think that you guys should know about how I look at some of these things, and also about some of the things to look for in the market when we're talking about market dumps and being prepared for them and looking out for the signs of a market dump and what the data shows us happens during these dumps or recessions or pullbacks or unfortunate situations that we find ourselves in sometimes when we're in the market. But if you're smart about it and you know what to look for, you can't always eliminate the risk, but you can prepare yourself for the risk. And I want to take today a little bit of Ethereum chart and match it up with a little bit of the S&P 500 chart and give you guys some historical data of that what I look at and why I say Ether is going to go back to $1,000 and the S&P is going to go to 2,500 points. So, and I want to tell you why I think that, and then I want to give you some pointers that I look at from a market perspective of some of the things that are being said and some of the things that you can observe from a market standpoint to kind of let some troubles on the horizon. But I want to run you through a little bit of this. See which chart do we got up? The S&P 500 chart here, and just give you guys some historical data about what I see in the market right now that'll lend us to that'll lead us to where I think we're gonna go. And you can do this with the Nasdaq. You can do this with the Dow. All the charts are gonna run about the same. So, we'll just go back here to what is this 2019. We'll just pick a spot on the S&P. So you see in 2019 there was a consolidation period here, very slow run up, and then a big pullback, and then a big huge run up here between, let's call it December of 9 December, January of 18, all the way up to, let's call this, I don't know, February of 20. Yeah, February of 20. Let's call it this run up here, which was a pretty significant run up. But as you can see what happened, this is a healthy run up. And then as you get to February, what you have is a healthy dump correction, right? And if you look at the correction is right there where you started in 18. It came back to the same level of where you started, right? So you the low of where you started. So you had this run up, and then the market gave it all back. What I call they gave it all back. They brought you back to where you started, and then from that point in, you know, 20 here. If I go down too low, won't give me my chart. So in that part, at that point, like let's call this, March of 20, you come over here and you had a pretty nice run up all the way until, mm, let's say, March of 20 is the big one, guys, because I want to go back to March of 20. What happened in March of 20? This was what we call the COVID collapse, right? The whole world stopped and the whole world just, everything just shut down, everything stopped. So you see this run up all the way to the COVID collapse, and then the market gave everything back, right? And before we get to where we are today, let's go back even a little bit further and pick another spot here. Um, because they're all the same. They're all going to do the same thing. We'll pick this healthy run up right here, right? So we have a healthy run up right here from let's see, from let's say this started, we dipped to the low probably around September 11th. Remember what happened on September 11th. So we started to correct for that. That was the low, and we started to correct for that. It this big huge run up here, right? And then correction. Correction here brought you where? Right down here to your last correction, right? Same thing, little run up, little correction there. So as you can see, what I'm trying to tell you is for every run up, you have a correction that brings you back to the prior low, right? And you can see that, see it right here. You know, look at that correction, the run up to correction, right? Happens every single time. So now it brings us to prior day, right? So when you look at this run up right here that we had pre-COVID, you know, during the COVID, all the way up to, let's call it December of 21 going into 22, is absolutely insane run up. 600% on the market, on the S&P 500 in this run up. Insane, unprecedented run up. Craziness. Little corrections here, but ultimately here's your run up, right? So what you see when you really dive deep into this is you have the correction here, very slight, run up, correction here, very slight, run up, run up, run up, run up, all the way to the top, little correction, and then you get to the peak of the mountain, as we call it, right? So you start correcting yourself, and the correction is here to here, right? There's your first correction. The next correction is from here to where? To right here, your next level of support. Then you have a run up to the top, to the bottom, right? Your next correction is where? To this line of support right here. Then you have a run up and a downturn right here. Where's your next line of correction? It's right here at this little line of support. Run up, run down where we are now is at this line of correction right here. So by saying that, as we look at the S&P 500, you have to look at the external factors that are in play right now. We have an inflation problem. We have a war in Ukraine, where Russia is getting ready to start ramping the troops up because it's wintertime. And they don't want to fight in the winter. It is wintertime, and they're going to try to end this war before the winter, because anybody who knows anything about the climate in Ukraine knows that fighting in the winter there is absurd. You have, which causes oil and gas issues, and then like I said, you have inflation, and then you have the fact that we printed so much money, all this stuff playing against us. So the natural correction for us is right here. Is our low in March is a natural correction on the S&P 500, which brings you down to like a 2,200 level, right? So when you go to ETH, yeah, that's ETH. So when you go to ETH, you will see the same run-ups, come down, run-ups, and comes down in the same time period, right? So here's November of 21 right here, same period we looked at, same corrections that come down, right? Same corrections all the way down, same corrections. You're going up, you're coming down to your prior lows. You're going up, you're coming down to your prior lows. You're going up, you're coming down, you're coming down. So the natural progression for that is if we go down to a 2,200 level, right now is about right here. And the last time we were right about here, ETH was at about $1,000. You lost 200 points here. ETH was at about $1,000. So that's what I use to say I believe that ETH is going to go down to $1,000. If you believe data and you believe that we're going to come back down here to our COVID lows and we're going to give back all our gains that we made through this, and I'll tell you why I believe that we're going to give back our gains um, here in a minute, then you're going to believe that ETH is going to hit $1,000. So this is the statistical data that I'm using to say to you, be prepared for a long ride. Because what you notice is look at this climb over here to 2020. Excuse me. And then look at the fall. The fall is always quicker than the climb. Even over here, you look at the climb, it's nice and steady. The fall is quicker than the climb. It is always quicker than the climb. So anybody that tells you that Ether is about to take off right now is not using the data and looking at the data. They may be looking at support lines, but they're not looking at historical data of the actual stock market. And as you can see, if you use this chart in the stock market and you match it up with ETH, you're basically on the same trajectory, the same pattern is playing itself out on the Ethereum side that plays itself out on the stock market. And like I said, you can take the NASDAQ, you can take the Dow, you can match the charts up. They're about the same. There's a little bit of give and take in each one of them, which leaves us open for some sort of discussion. But at the end of the day, they're about the same. So this is what I'm saying. This is why I'm saying ETH is going to go reach $1,000, right? And we're not that far away. We're sitting 1,200, 1,300 right now. So that's not that big of a fall to lose $300. So this is why I'm telling you guys to trade with caution and use data to make decisions. So when you're making a decision right now, you have to say to yourself, am I making a decision based on ETH being at $1,500 in 2 months, or am I making a decision on my investment strategy for crypto based on ETH being at $1,000 in a couple of months, right? So these are the thoughts that have to run through your head. So when you're looking at these things, and through the .com bubble, and also through the housing market crash, what you've seen, and also now this crash, what we'll call a COVID crash, is the same thing. What you've seen was money flowing, and the government bailing out the markets. In the housing market, you had the government that they bailed the banks out, right? And then the banks used that money that the government gave them to pump into the stock market, which gave it an artificial pump up. They did a whole bunch of buybacks. So it was an artificial pump up, and everybody made out in the stock market, right? And you had all these shows on, Flip This House, all this stuff about you can't lose. You can't lose. If you just get in the housing market, you can't lose. And everybody was giving out loans, and everybody was giving out credit, and everybody was giving out all this stuff. And you heard this rhetoric about you can't lose, you can't lose, you can't lose, right? Well, the same thing happened in the .com era. You had all these companies that were creating these .com names and then going on the market and starting up, stocks and IPOs and all this other stuff. And, you had Macy's just by putting a .com on their name and starting a website, and their stocks would explode. And, all this stuff going on, and money was flowing, and lenders were lending. And then all of a sudden, we had this .com. Somebody stuck a pin in that balloon and broke it, right? And then what happened? It took us a little while, and we started to move up. And then the housing market drove the next leg up, and then you started to hear the same thing. You can't lose. It's the housing market. Loans were given, credit was given, all this stuff was given. Housing market crashed. Banks were bailed out. Banks used that money to pump the stock market. So that came all the way up, and then it crashed. And, it was what it was. So what do we have now? We have what I call a COVID crash, right? We were on a rise up. COVID crashed us. World came to a stop. World came to an end. The government decided that they were going to turn the printers on again, print money, give money to the businesses now with PPE loans, and then also give additional stimulus checks to everybody. So we have all this artificial money in the market right now, which is why I think we're going to come here. It's all this money, it's artificial money. Think about it from a business perspective. You get a PPE loan, and then you also can get loans, a PPE loan that you never had to pay back. And then you can get loans at almost a 0% interest rate, but yet you can get a five return percent return on your investment by putting it in the market. So why wouldn't, if you can borrow money at almost a 0% interest rate, why wouldn't you, right? So you have all this stuff going on right now. And the PPE loans had people keeping employees that they once would have laid off, and now the market's crashing. Now that money's gone. So what are the employers going to do with them employees? Plus you have inflation. Plus you have the war. Plus you have this gas issue. Plus you have all this other issue, all these other issues going on that are external. You have to look at all these external environments and say, we're going back here. We're going to the pre-COVID levels, which makes sense for the correction. So that's how I'm making my decisions and making my investments right now. So, when we always say do your own research, but we don't actually show you how to do your own research. So looking at this chart, you would have to say that the growth from 2000 till now, when we're starting to come down, is unhealthy growth in the market, right? 600% up is unhealthy growth in the market. You had a correction here. No, actually here, this should have been the correction for the market. And you should have seen a bigger dip. This should have been a correction. But because the government was pushing so much artificial money into the market, it continued to go up unchecked. The market went up unchecked with artificial money. So now it's time to pay the bills. And that's what I call it. It's time to pay the bills. And we're going to pay the bills, and there's going to be pain. It's not going to be easy. Investing is not going to be easy for the amateurs or the people who do not know what's going on, or the people who don't take good advice from people. And we're going to pay our bills all the way down to around the 2200 level, so in the S&P 500. And it's a healthy correction. That is a healthy correction. And it will affect the Ethereum market. It's going to affect the Ethereum market to the point where you're looking at about $1,000 Ethereum. And you know what? It's okay as long as the correction itself is healthy. And this is a healthy correction. There's not a lot that's going to stop this. You have Powell, who wants to get inflation down to 2% by 2025. Well, that's a long stretch, but the real pain is going to come in 2022 and 2023, where this correction happens. And that's going to be the pain in the market. And then you'll start to see the market take off a little. After we make this correction is when you're going to start to see that market take off. So everybody in crypto wants to know, well, when's the bull run coming? When's the bull run coming? The bull run is going to come when the stocks make this correction and they give back the artificial money that was pumped into the market, which should have been in this correction between here and here. And that's just the bottom line. I don't want to be the bearer of bad news for you. I don't want to say to you, don't invest. I don't want to say to you, you shouldn't put your money in crypto. You shouldn't put your money in stocks. I'm a crypto guy. I think you should put your money in crypto. I think that's where the future is. I do think that there's bargains to be had right now. I think that if you're smart and you play the market right now the way that it should be played, and you do the things that you should do, and you listen to the right people, and you invest smartly, at the end of this, you'll be a millionaire if done correctly. I do believe that. How long that's going to take, I don't know. They say the end of 2023, going into 24. In 24, you're going to have the Bitcoin halving. So that's a big catalyst. But I can tell you what I can tell you is that the bull run's not going to start until the stock market makes the correction of where we're at. And, that's just a matter of fact. So the projects that we're looking at in crypto that everybody's saying, these projects are dumping, everybody's dumping. The stock market's dumping, these projects are dumping, Ethereum's dumping. Ethereum's going to continue to dump. Ethereum's going to continue to go down to about that $1,000 level. We got about 200 more to go. And could even be worse depending on how bad this correction is. So, we will see. But the projects that you're investing in now, it doesn't mean that they're not doing what they're supposed to be doing. They're not making things, building things that are moving the projects forward. What it means is that the market is in a situation where the market has to correct and then shoot up. So does that mean don't invest in them? No, that means invest smartly. That means dollar cost average your way in. That means make sure that when there's an opportunity to take profit, you're taking profit. Make sure that, you're in projects only that you believe in. You're not jumping into degen plays and getting wrecked, because when in a market like this, there's no room to get wrecked. You have to believe in the projects that you're in. So, yes, a project's going to go down, but if you believe in that project, it will come back. But if you find yourself jumping into plays where you think you're going to 10x, 100x, 1000x tomorrow, you're in the wrong market. You're in the right market at the wrong time. And now's not the time for that. So I just wanted to give you guys a little bit about what I look at, why I think Ethereum is going to 1,000, my reasoning behind Ethereum going to 1,000, and things that you guys should be looking for. If money's easy to come by and creditors are just giving credit out like crazy, and you're in a market where people are saying you can't lose, get ready for the drop to come. And then and I'll just say this from a credit standpoint, when these things happen, people extend their credit lines and they take mortgages out, second mortgages. And then when these drops happen, the banks come in and say, we overextended you. We're going to cut your credit card balance. We're going to cut your credit card down to this much of that you can have on it, and things like that. And what that does is it limits your debt to credit ratio, which actually destroys your credit. So be careful when we're in these markets where money is just flying around. We're not in it now, but we will be again. But there's some advice, like be careful, because if you're overextended, and they will overextend you in a good market, they're going to cut you back, and then your credit's going to get destroyed, and then you're not going to have access to the funds that you want to have access to. And that's just a little side note outside of crypto. But look at the charts. If you don't know how to read the charts or have a basic understanding, just a basic understanding of how to read the charts, sit down, talk to somebody, and just get some basic understanding. You don't have to be a wizard. I'm not a wizard. I don't look at these things and have crazy diagrams all over them, but I know the basics and I know what to look for. But take some time. Now's the time to accumulate. Now's the time to learn. Now's the time to get into projects that you believe in. Now's the time to dollar cost average into them projects. Now is the time to do all the educational learning that you possibly can because you have time. Time. You got time. We're not going to a bull market in 2022, and I highly doubt that we're going to a bull market anywhere at the start of 2023, and maybe not 2023 at all. So with that, that's my take on it. That's how I say Ethereum is going to get to 1,000. And everybody have a great day. Appreciate it. Like and subscribe to this channel if you want some more content. I try to bring you guys some quick videos like this. This one wasn't really quick, but try to give you guys something to to try to keep you up. And I know this video wasn't positive, but I felt like it was needed. All right. Everybody have a good day. Like and subscribe. Bye.